Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2024, and we're diving into PulteGroup's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PulteGroup, one of America's largest home builders, has just released its Q3 2024 earnings, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. PulteGroup reported a net income of $698 million, or $3.35 per share, which is a 16% increase from last year. John, what are the key drivers behind this growth?
Absolutely. The growth in earnings per share is primarily driven by a 12% increase in home sale revenues, reaching $4.3 billion. This was supported by a 12% rise in home closings. However, it's worth noting that the gross margin slightly decreased to 28.8% from 29.5% last year, indicating some pressure on profitability despite the revenue growth.
That's interesting. So while revenues are up, margins are slightly compressed. What does this mean for PulteGroup's operational efficiency?
It suggests that while PulteGroup is successfully increasing sales volume, they are facing higher costs, possibly from materials or labor, which is impacting their margins. However, their ability to maintain a high gross margin of 28.8% is still commendable in the current market environment.
Strategic initiatives and shareholder returns. Moving on to strategic initiatives, PulteGroup has been active in returning value to shareholders. Can you elaborate on their recent activities?
Certainly. PulteGroup repurchased $320 million worth of common shares in the third quarter, which is part of their broader strategy to return capital to shareholders. Additionally, they declared a dividend of 20 cents per share. Their return on equity stands at an impressive 27%, highlighting their efficient use of capital.
And what about their investments in the business?
They invested $1.4 billion into their operations, which aligns with their strategy to balance shareholder returns with business growth. This investment is crucial for sustaining their growth trajectory and addressing the structural shortage of homes in the market.
Market conditions and future outlook. Let's discuss the market conditions and future outlook. How is PulteGroup positioned in the current housing market?
PulteGroup is well positioned, with net new orders totaling 7,031 homes valued at $3.9 billion. Their backlog stands at 12,089 homes valued at $7.7 billion, providing a strong pipeline for future revenue. The CEO, Ryan Marshall, mentioned that the Federal Reserve's interest rate cuts are a powerful tool to address affordability challenges, which could further boost demand.
That's promising. What are the expectations for the rest of the year?
Given their strong performance in the third quarter and the favorable market conditions, PulteGroup is on track to deliver a record year of earnings. The leadership is optimistic about maintaining this momentum into the next fiscal year.
Risks and challenges. Every company faces risks and challenges. What should investors be aware of regarding PulteGroup?
Investors should note the slight pressure on gross margins, which decreased from 29.9% to 28.8%. Additionally, SG&A expenses increased to 9.4% of home sale revenues, up from 9.1%. These factors indicate rising costs and competitive pressure in the market. Economic uncertainties, such as changes in interest rates and consumer confidence, also pose potential risks.
How significant are these challenges in the broader context?
While these challenges are notable, PulteGroup's strong financial position and strategic initiatives provide a buffer. Their ability to adapt to market conditions and maintain profitability will be key in navigating these challenges.
Key takeaways. As we wrap up, let's summarize PulteGroup's performance. John, what are the key takeaways for investors?
PulteGroup has delivered strong third-quarter results with earnings per share of $3.35 and home sale revenues of $4.3 billion. They've actively returned value to shareholders through a $320 million share repurchase and have a robust pipeline with 7,031 net new orders. Despite some margin pressure, their strategic initiatives and market positioning are strong.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on PulteGroup's performance in the comments below. Until next time.